Interest rates are sky high. There's no good real estate investments out there. What are we gonna do? Whoa, 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 whoa. Let you in on a little secret. When the market shifts, new opportunities present themselves. You just have to know how to spot them. That's how we found the investment opportunity of preferred equity, and I'm going to tell you all about it in this video. I'm Susan Elliott, and in this video, we are going to talk about preferred equity and how this could be the new investment opportunity for you to put your capital in a low-risk investment and come out ahead even as the market continues to go down, if that's what's going to happen. Think about it like getting that smooth ride on the slip and slide all the way to the end without hitting the spiky grass at the bottom. Summer vibes. All right, before we get going, subscribe to this channel and like this video quick. If you get any value out of this, it helps us a lot reach more people. Okay, let's jump in. Okay, first let me go over where the opportunity of preferred equity comes from. Then I'm going to talk about what preferred equity is. I'll go into how you can leverage this type of investment opportunity to get great returns despite the crazy market dynamics out there, despite super high asking prices on properties from single-family homes to multifamily apartment complexes, and despite the entire slowdown of the real estate market. Okay, here's where we are in 4 quick steps. Interest rates have shot up. It costs more to finance real estate. Buyers can't pay what sellers are asking for. And finally, we're in a slowdown. There's just not much purchasing of properties out there. So if you're a passive real estate investor, like I am, I'm not seeing as many deals out there. What gives? So behind the scenes, at the same time, existing owners are starting to creep into this scary zone of potentially skyrocketing costs. Now, these are the owners of these properties, commercial real estate properties, that purchased financing at a floating interest rate. So if they purchased at what felt like a really low, good interest rate that made all the numbers work, great returns for everyone, but those interest rates are starting to creep up. That means their cost for debt every month, the cost they're paying back to their lender, is increasing every month. Now that's chipping into cash flow, and eventually it's going to chip so far into reserves that they may have to do a capital call with their investors, which is no fun scenario to be in. Or owners have purchased a cap on their real estate, but the caps are only good for a certain amount of time, right? They expire. And so what they may have said, oh, well, look, our interest rate can't go above this threshold despite it rising up with the Fed, but that threshold disappears coming up here soon. So all of these owners, the ones that purchase floating rate or bridge loans and the ones that purchased a cap, are facing this scenario where they may have a really strong performing asset. The renters are paying on time. There's no deferred maintenance, everything's brought up, they're increasing rents at the progress that their business plan called for, but their costs are going to skyrocket with new debt. They need capital right now. And with this problem of needing capital comes huge opportunity in the form of the preferred equity investment class. Preferred equity, or pref equity, is really just an infusion of capital into the deal. Think of the word preferred as meaning getting paid first, similar to your preferred return as a limited partner passive investor. You get paid your preferred return before anybody else in the deal gets paid their returns, like the owners or the general partners in the deal. In preferred equity, you get preferred payments as well. Think of this as being the early risers of a whale watching tour where you get to see those whale tails crest over the horizon line of the sea up close and personal before anybody else gets to. Okay, I threw in that analogy just to relive some boat life memories with my family from this past winter in Mexico. Sorry about that. But seriously, as a pref equity investor, you're higher up in the capital stack. Pref equity sits just below the primary debt holder of the property. This is the bank or the lender of the property. They sit above the common equity partnerships or the common equity partners like the limited partners. And this is all within the capital stack. So you're getting this top position, almost top position in the capital stack as a preferred equity investor. What this means for preferred equity investors is that you get paid out first, often as a fixed return, very similar to what the bank is getting, right? That's why banks are banks. They get the same thing every month, no matter what. And as a preferred equity investor, you get a fixed rate return every month before even that common equity or limited partners are paid out their preferred returns. If anything is left over after they pay the debt and after they pay the preferred equity investors, it goes to those limited partners, or their returns just get accrued into the end. This is how preferred equity is a lower risk investment. You get paid first. You get a fixed rate of return. Sometimes even you get a piece of the backside of it. Unlike the banks, if this property sells for 3 times as much as it was purchased for, the banks don't get to participate in any of that. But sometimes in preferred equity investments, you get to participate in some of that upside. It all depends on how the preferred equity investment is structured, so be sure to look for that. Check out my conversation with Annie Dickerson in our podcast, The Life and Money Show, where we kind of chat about the details of preferred equity investment. If you're really interested in this, it's a good talk. Okay, go ahead and hit that like and subscribe if you haven't already at this point in the video. And now I'm going to talk to you about how you can get started as a preferred equity investor. So, how can you come out ahead in this crazy market? We all think about real estate investing as wishing that we had taken part in it when the prices were super low and we didn't know, but at that time it can be really hard to invest because there's a lot of fear in the market. That's something like right now, right? We all maybe wish we had bought a ton of those really cheap houses in 2009 to be able to flip or set up as long-term rentals, but maybe we didn't have the capital, or maybe we were too scared to take part in the market then. Well, right now there's a lot of investors sitting on the sidelines with capital, and they're maybe too scared to take part in what's going on out there. Luckily, the preferred equity investment is a lower risk investment. To be able to invest as a preferred equity investor, you're going to get that fixed rate of return, and you're even going to potentially participate in the upside of the deal. Basically, you don't have to sit on the sidelines and waste precious time that your money could be growing. That means that when we're out of this downturn and we're on to the next big boom, that you will be way ahead of those investors that decided to take a step back, pause, and just wait to see where things would happen. This is that kind of opportunity. The best part is that these assets that are invested with preferred equity are good, strong assets in growth markets like in the Sun Belt across the United States. They're assets where there's high occupancy. Renters are happy. They're paying their rents. There's no big deferred maintenance cost. They just need a little bit of capital to solve this interest rate problem that they have. And that's the opportunity where preferred equity can come in. For more information and potentially seeing any offerings we might have around preferred equity, check out our website and our open deals page. I'll link to that in the description below. As always, join our investor club. Whether you're accredited or non-accredited investors, we've got options for all of you, and that's where it starts. That's how you can start investing. You can talk to our team, you can get valuable resources, and become a part of this group of people that understands leveraging passive real estate investments can really take you farther faster. Okay, we'll see you all next time. Thanks.